Good afternoon on this fabulous, thriving Thursday. I'm talking to my audience on day 4 of the Credit Repair Challenge. Day 4, we're talking about 10% of your credit score. This is the challenges we face, and we're talking about the credit card application. Okay? We're talking about the credit card application. That's when we filtered out, we got a credit card or a store credit card. So this is a recap that I'm doing for Mr. June Carla. I want to thank Mr. June Carla. He's VP of Marketing under the company of My Econ. And he does the credit repair system and software. This is a 5-day credit repair challenge that we are doing, everyone. So I want to thank everyone for just jumping on, getting the information, finding out some little value of this. Now, we have a 5-day credit challenge going on, and we want to thank everyone for just hopping on and getting the information. So, while we are doing this credit challenge, this is teaching us and training us, the associates, and helping others on credit repair, everyone. So on day 1, we learned about our payment history, that it counted for 35% of our credit score. On day 2, we learned about utilization counted for 50% of our credit score. Day 3, we learned about our credit history that counts, and that's 30% of our credit score. And on day 3, we learned about the credit history, that 15% of your credit score, that's a total of 80% of the whole FICO score and the credit repair score. Okay, everyone? So, I encourage you to, if you're interested, I want you to get on, join this credit score and credit repair challenge. We're helping millions and millions of Americans across the country. We're changing the world with this credit repair system. So day 4, which is Thriving Thursday today, we're doing the credit repair challenge. We are talking to individuals and families with the credit repair score. And guess what, everyone? Having some type of new credit, this factor counts, and that's 10% of your credit score. New credit is tricky, but when it comes to the new credit, adding it too much to your credit score, it can be a short time period that can easily actually hurt you or your credit score. However, adding some new credit to your old credit, troubling accounts, this may actually help your score, everyone. Isn't that amazing? So, more accurately, by you doing this, it helps your score by decreasing, and it helps it to decrease the credit. Utilization of your ratio, that sounds a little confusing. And I want to emphasize that, because even Mr. June Carla, he always emphasizes it to us. That if it sounds confusing, but guess what? You can do it. Now, utilization and the ratio of you welcoming and educating yourself, looking at your credit score, going to Credit Karma, finding out, using the whole 35% and the 30%, and with the new credit, this can get your FICO credit score. Now, inquiries that's on your credit score. Okay, it's a request that you find out legitimately businesses to check your credit. There are 2 types of credit inquiries. You have the hard of your credit and the soft part of your credit. A hard inquiry that occurs what you have applied for on your credit history with a lender, that includes credit cards and credit checks when you applied, okay? Like when you applied for an auto loan, when you applied for a mortgage, when you apply for any type of credit card, etc. Only hard inquiries have an effect on your FICO score. Okay? A soft inquiry occurs when you are checking out your own credit card or when you're in business. A credit or with your business, if you're checking out your credit, which makes a promotional offer. Soft inquiries have a zero effect on your FICO score. Now remember everyone, inquiries may occur and it may have a big impact on your credit score. It depends on how each individual inquire different situations, okay? Your FICO score takes into consideration, and it also, and these different items which we are factoring your credit inquiries, okay? Remember, number one, the number of recent credit openings on your account. Number two, the number of your recent credit inquiries. And number three, the time since your last credit history, okay? And your credit inquiry. Now, when you apply for your credit inquiries, okay, on your credit score, on your credit history, it remains on your credit report for about 2 years, everyone, okay? Now, however, only if your inquiries on your credit score for the last 12 months have been affected on your credit score. People who have 1 or 2 recent credit inquiries, which they will have no more than 5 points taken off your credit score. However, individuals whom with the large number of credit inquiries on their credit score poses a great risk. Okay, everyone? This poses a great risk for you on your credit history. Now, if your risk is this experience, if you're experiencing this, it may drop that on your credit score. Okay, studies show that people with 6 inquiries or more, or 8 on their credit history morally, okay, they're likely to describe or declare bankruptcy, all right? That's 9 times out of 10 most people that do that. Now today, which by us doing the credit repair and on this challenge, we are educating you that if you have this, you want to try to remove these inquiries off your credit repair history. We don't want you to file bankruptcy. We want you to pay them, and you're dismissed one by one. Now, day 4 of today's credit repair challenge is the new credit. That's what we're talking about on day 4, new credit. Now, new credit helps you. New credit helps your score by lowering it and all over the credit utilization. And if you have your own credit card with a $5,000 limit or $500 limit or $1,000 credit card limit, this has a balance of you. So if you have a $5,000 credit balance and it's $4,000 of your credit utilization ratio, you will have 80% on your credit whole FICO score. However, if you're not able to get a new credit card with a $10,000 limit and you do not use it, then your credit utilization will fall, and that's 27%. That's a few more points off your credit history. Now, you may lose on the credit inquiries, but this could be made up only by having a lower credit utilization ratio. The best is to be conservative. Okay, whenever you're applying for a new credit, this doesn't mean that you should be afraid of opening up a new credit card account or opening up some type of new credit. Apply for some new credit, and when you have a lot of it, then that's great. But if you're late and you have late payments on your credit report, that's not a good suggestion for you to apply for a new credit card. So on your new credit report, by you adding this new on your new accounts and new accurate on your inquiries, this right here, paying them on time, can help regenerate your credit score. We want to demonstrate you and tell you all the good possibilities that you can have by you getting new credit, everyone. So demonstrating it, now acting more responsible, this is good. Good practicing and paying your credit on time, having a good new credit account is awesome. Okay? So we practice and continuing over time to see if your credit score continues to increase. And that's what we want to attempt to do. We attempt to rebuild our history and the responsible for borrowing, and it's improfitable. Okay, everyone? Improfitable. So, short time frames, getting a new item, and you can drop your score, everyone. And that shows the borrowers that can take on new debt. So, that helps you because that old debt will now help decrease the new debt, decrease the old debt to let your new debt, and it's likely to bring your score up. And that's amazing. Okay. Now, becoming delinquent or missing a loan payment. We don't want to do that. Okay? So by you becoming a delinquent or you missed on a loan payment, then the borrowers will have to not open a new account. They have their prerogative to say, no, we're not going to let you open a new account. By you starting new credit, building your new credit, and having a good new credit account, that helps you tremendously. So your new crediting score, it models the trends to open up and have new accounts as a temporarily to help you and that negative from your credit score. Do apply for new credit. You have to make this count, okay, everyone? Borrowers should not only open up a new account if they do not do their homework ahead of time. This can determine what type of credit you will need. All right? Now, this is important. The larger the number of your credit inquiries, that poses a greater risk for your experience, a bigger drop in your credit score. Okay? Now, we want you to get that new credit score up. Next, these types of loans. Now, a lot of people like to take loans out. I'm one, if you can't do it, don't do it. But these type of loans, there are several types of loans that you can get. You can apply for a loan to rebuild your credit, a positive payment, a history to where you lower your credit utilization. That's important. You must choose carefully the types of loans that you apply for yourself or anyone. The department store credit cards. They are great for saving on money and purchases and for your favorite retails of stores. Or simply just getting a credit card with a low cost for a store retail that you want to open up. Awesome. But remember, when you apply for it, remember to be punctual on paying it off. Now, only fair the credit approval, which makes that easier to get. Store credit cards usually have a higher ARPs, and that's the percentage under the card. Brand stores that opens and offers you a few $100s on their credit limit. Secure credit cards. If you have a $500 to $1,000 to $5,000, this can consider applying for and a secure credit card. That's just like regular credit cards with the explanation that you have a prepaid care. A co-signer for a loan. You have a relative or a friend or a cousin or a family member who has good credit, and they're willing to co-sign for you. This could be excellent and an excellent option for some of you to rebuild your credit. To you, it could also be dangerous. It is a great option for the borrower, but remember, it's horrible for the co-signer, because if that person does not pay it, the co-signer is responsible for the loan, and that defaults you if you have late payments. Excuse me. Credit card or credit building loans. Okay? This is a loan, and it's listed for oftentimes from banks, credit unions, and this is a CD. And it's for credit unions that offer this. And what I like about this is what you know as a credit builder loan. This is a service which the bank or the credit union puts $500 in use or $1,000 in use in a CD for you. And this account is frozen. It shows you that the borrower that you can't touch it. But what it helps you, that you take your money and each time you keep paying into this until you pay it up. And that helps establish credit building on good credit building. Okay? Now each day, this challenge, you have to take small steps towards learning how to fix your credit, everyone. And then in this company, and what we do in my econ, which is a fabulous, and this site is www.howtoshiftyourincome.com. And we would love for you to come aboard, get this information. You can get this information and your membership today. Get back to me if you like what you hear. Excuse me. And we want to help as many as Americans to fix their credit score. And this company is reporting all of your credit history. It helps millions of us. Excuse me. So, if you're willing, I'm willing. Let's get that credit score up. Let's level up. My name is Gwendolyn Dotson. I'm with the team Power Builders Unify and Conquer, and the team GMG, getting your finances on the right side of capitalism. Now remember, on this recap, we want to thank Mr. June Carla and the 5-day credit challenge repair. If you're willing, I'm willing. Let's get our credit score up. Remember, the site is www.howtoshiftyourincome.com. We're helping many Americans to get their credit score up. Have a thriving Thursday on purpose. Be blessed.